Good morning, beautiful people. This is Pope with Docta Trading. 2 extremely important rules to trading. 1, never fight the Fed. 2, never fight the algorithms. What I mean by that is it basically looks like the bulls just took over for a little while. Yesterday, when CPI came out at 7.7 instead of the expected 8% forecast, what this did was it essentially kind of recalculated our currency markets. The dollar went down, 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 and equities flew through the roof. That type of break to the upside is the type of break that makes a difference in a trending market. Right now in pre-market, we have 396.46 on the SPY. We know that we broke our 395 level yesterday that we were looking at. And right now we are talking about seeing that 400 break through. That 400 level, to me, I have a little bit of a bias with it because I don't think we can break it, but I'm going to be proven wrong for that. And I'm pretty aware of that. I just know that I have to be careful trading it because I'm absolutely shocked that we're getting this far. I'm not shocked that CPI came in low. I'm really surprised at the market reaction and the levels that we're working with right now. It's either going to be the biggest fake out to a bull run that I've ever seen today, or it's going to lead us into some heavy momentum for at least the next week or two of trading after today. So today is a huge day. Wanted to get this video up and out as fast as I can, so I'm not going to waste too much of your time going through too many of our levels. We really want to talk about what's going on here, right? Because this actually, to me, looks much more like us breaking out of a bear market cycle than it does looking like a bull run in a bear cycle. And we've been talking about, we've been seeing the gifts and all year long and said, it's a trap, it's a trap. This is the one that looks the least like a trap all year long. All the other ones were traps. And, but essentially where we're at right now is this place in between the reality of the Fed and, not fighting the Fed, who's trying to constract and tighten the economy, and not fighting the algorithms. Now the algorithms are trying to go up. One of the biggest mistakes that people make when they want to bet against the algorithms is they choose their inner idea of what they think is supposed to be happening, and none of that actually matters when it comes to price action, because price action is all about, and that's because price action is all about companies making a bunch of money on people who aren't trading these markets correctly. Okay, and you can see right here, we're on the 1-day chart. I think there is a general understanding that this is quite a breakout and that we're in a bullish sentiment right now. Like I said, the 400 level is very big. If we break that 400 level, we're going to have to do a retracement basically back from the entire. Why don't we just do the retracement right now? That's perfect. All right, so let's draw this up here. Let's do a little fib retracement down to our, I believe that's a June low of 348. Is that correct? That's October low. And we need to look at these levels here. So you see here, we've got that 400 level. That's a big one. 404 to 405 level. That's very big because that's bumping off that moving average. The upper bands of VWAP are going to be bringing us in at the, isn't that funny, the 412 level. I think we're going to have a lot more of choppiness as we break through. So basically what I think, we're going to hit the head on the ceiling at 38, 39. I think 400, if we get to it, we'll probably hit it, double tap it, break through to 401, 402, and then pull back in throughout today. That's what I think today's action is going to look like. If we have a major pullback and this is all a fake out, then it's really one of the best fake outs I've seen in a while. So we'll see how that's going to go. Talking about levels to the downside, it's really the same levels as we worked our way up. We have the same supply zones, or demand zones, excuse me, on the way down as well. There's not too much of a difference because this is actually a really short amount of time that we're drawing a lot of these levels from. And so really what you want to be looking for is the upside. You want to see where we trade. If we end up with SPY, for example, let's call this out just right. All right, so if we say SPY ends up over call it 1.25% on the day. That I would consider to be a breakout to the bullish side. The bear market is hibernating for now, and we're essentially front loading a Santa Claus rally, a Christmas rally into the quarter. This is Q4, everyone remember. Companies don't like to report losses in Q4, so there is plenty of pumping going on. There are very few negative catalysts going on. I think the only thing that could really be a major negative catalyst would either be, a very terrible CPI print for November, which we're not expecting, and possibly, when the Fed comes out with 75 basis points instead of 50, that could be a negative catalyst, but I don't really think it'll do anything more than make us trade in a chop, because we're right now in a cycle of the liquidity and volatility where it dried up. The cycle is back. Things are more liquid now, and this is all about the price action. So it's going to feel like you're fighting against the Fed when you're not fighting against the algorithms. But you have to know that the Fed has another intention, that it goes a lot further than just what they talk about with their dual mandate. They're trying to keep the dollar really, really strong. And so if you're looking for a lead indicator, you're going to look at DXY, the dollar index, and you're going to look for weakness. Weakness means strength in equities. All right. Now, if we see the dollar shooting up again, that's going to be a reversal back to the bear market trends. This is not really going to be as much about treasuries as it is about the dollar right now. If the dollar DXY continues to show weakness, this is very bullish for the equities. So let's get ready for the levels. Let me get this video uploaded and out so we can be ready for the day. I'm really looking forward to this one. Trade wisely. Messages in the comments. If you have any questions, need any help with anything that you're doing, and I mean anything, I'll either make a video about it or I'll just answer the question and help you out along the way. All right, people, good luck trading today. Peace. And lastly, I just want to take a moment to say thank you to our veterans for your service and your work on our Hugger Veterans Day, this 11/11. Wish yourself luck. You should have never had to go, but we're grateful that you did. Thank you.